Hello, everyone, and welcome to today's webinar, The Effect of Supply Chains on E-commerce and State Taxes. We're excited you could join us. My name is Megan Billingsley, and I'll be moderating today's presentation. Before we get started, just a few housekeeping notes. Today's webinar console can be completely customized, so feel free to resize and rearrange the windows to your liking. In the related content widget on the bottom toolbar, you'll find the ebook of today's presentation, as well as other free resources. Be sure to check those out. And if you have any questions during the presentation, submit them in the Q&A widget at any time during the webinar, or feel free to connect with our presenters via LinkedIn. So let's continue on and meet our speakers. We're thrilled to be joined today by Michael Bernard, Chief Tax Officer with Transaction Tax. He's an executive-level tax attorney with a diverse portfolio of experience in corporate tax, including substantive knowledge of U.S. and international tax laws. Joining him is George Salas, Principal Economist and Tax Policy Advisor. George is an economist, lawyer, and tax professional with many years of experience in tax policies and regulations around the world. Our final speaker today is Peter Olenday, Director, Retail Consulting. Peter is responsible for the integration of Vertex's indirect tax solutions in the retail space, specifically with point-of-sale systems and e-commerce platforms. Today, we're going to deep dive on the direct impact supply chain disruptions have on commerce, especially regarding tax policy and compliance. So without further ado, I'll pass it over to you, George.
Thank you very much. Good afternoon, everyone. Glad that you can make it to our webinar today. And it is very interesting that we find ourselves here because in the last 2 years, obviously, the impact on supply chains that has had on the international economy, not just the U.S. economy, has been incredibly high and increasing. And of course, that in itself has implications in both e-commerce, retail sales, and remote sales, as well as in state taxation. So our first slide here looks at an estimation from both a statistic and the U.S. Department of Commerce on how quickly and fast since 1913 has U.S. retail e-commerce sales have increased. And as you can see by quarter one, 2022, we have an approximately more than 17% increase on retail sales. Needless to say, of course, during that pandemic years, that increased even more cyclically through the 4 quarters of 2020, 2021, and 2022. So although you see here an adjusted chart, that actually went up and down during the pandemic years where particularly retail sales was not physical. And therefore, online ordering and e-commerce skyrocketed tremendously. This is very important because this is expected to grow into 2025, as you shall see. So it is no doubt that e-commerce, of course, is a byproduct of trade. And that expansion has impacted global supply chain at a time where production stopped and at a time where traffic of seagoing vessels and shippings slowed. And of course, e-commerce is indeed a driver of global trade, global production, and the consumption of goods that increased by the people staying at home all over the world. So obviously that should not come as a surprise. However, what it is a surprise is that online sales, although it doubled, it remained relatively elevated in the year and a half after that, including until this day. In fact, as you can see there on the third bullet, revenue from all retail e-commerce in the United States was estimated at about $768 billion. And as I said, expected to be increased by 2025. And this is in a projected level. So when we go into real numbers of real retail sales expansion, again, cyclically, that can be higher or lower based on inflation adjustment. But that adjustment is expected also to be matched to the type of supply chain bottlenecks easing that is already occurring. Now, before I go into that bottleneck, those nuts on delivery, on production, and of course on transport have actually created inflation because demand remains high, while at the same time, prices keep increasing because of orders coming in. So inflation due to these supply chains continue to increase even as we speak, because although it is lower, for example, China has not totally reopened yet. Vietnam is now beginning to reopen, and other venues will be reopening soon. So again, orders keep coming in, adjustments in retail production keeps going out, but transportation to some extent still slowed.
And George, just a quick comment around that. So some good insights there. I guess one thing I would say too is that what we saw with a lot of the manufacturers and people who were our customers is that they had to reconfigure factories. And I think partly what you were trying to get to, George, for example, just in the US, normally there's about 11 million washers and dryers that are actually produced every year. During the pandemic, they had to reconfigure their manufacturing floors, and then they couldn't get parts also because those parts were somewhere offshore that had to be fed into the product. And so they went from basically 11 million units to down to about 6. And people weren't traveling, so they weren't spending their money on like hospitality or services and like that, and they were buying property, tangible personal property. So that's really what kind of created this enormous demand for tangible products. And then obviously because of these manufacturing companies reconfiguring, they just simply couldn't put out the same amount of goods. Your insight on the piece of the transportation also, that was constricted as well. So
that's an excellent observation, because when I am addressing the supply side bottlenecks, that is what we call demand push up, that not only creates more inflation, but that demand creates also more scarcity and shortage. So you're absolutely right. At the time when you're going to need product substitution to literally readjust that, it sometimes still falls short. And that's why you see here in this slide that according to the U.S. Accountability Office, right, even to this day, because the final consumptions resides in the states, and the final budget recipients and beneficiaries of that is the state. You notice that a third of the state tax collections still comes from sales tax. However, in 2021, 33 states, and I would wager to say 33 or more, reported approximately $23 billion in remote sales tax revenue increase. Now, think about what Mike just told you and what I also just said. In the one side, we have great demand, push for product, raising inflation, but at the same time, based on available data from those sales, still the states were actually experiencing high sales tax revenue increases. So what you can see is imagine what this will look like once China reopens, all transportation knots are reopened as well. And also at the same time, just think of what would happen when you have a leveling between physical retail sale now with the addition of heightened remote sales, okay? Because of that, the cost of collecting taxes, such as software, audit, and audits that are still the responsibility, of course, of the seller, is still going up as well. So as a reminder, you should see, of course, that after the 2018 Wayfair decision, states can require, of course, e-commerce sellers to literally, if I may say that, contribute remotely to the state's without physical presence. Now, notice why I changed the verbiage and I say contribute remotely. Because often they're not, since Wayfair is a U.S. decision, we think of U.S. remote sales from all over the United States domestically, when in reality it's inbound as well from sellers, remote sellers from all over the world.
And George, just a little bit there, just a couple comments. You mentioned the foreign inbound sellers. So you literally can have someone who can bypass traditional retail channels here in the U.S. and just simply sell from a website that's remotely outside the U.S. and set and drop and directly ship those things into the U.S. So I think one of the challenges that Department of Revenues have had is actually to find a number of those sellers who are actually doing that and actually and then not collecting or remitting sales tax, even when they're meeting the nexus standards in a particular state. So while the emphasis for a lot of states on Wayfair the first couple of years was on just getting retailers on board to collect or remit if they make the nexus standards, now it's really kind of turning to enforcement and making sure that people are actually paying their share if they're selling into a particular state.
That's exactly right, Michael. And in fact, this is where the impact of that we were just speaking of and the implications from those supply chains begin to affect e-commerce and marketplace tax revenue collection. That, as you well said, that Wayfair cushion, as you see there, it's really very interesting because internet sales, although it softened the pandemic economic blow, as you see there, nevertheless created a cushion for the states. So in other words, we did not have physical retail presence and sales revenue that were in the malls, but e-commerce and marketplace softened that economic blow and actually increased that tax revenue for the states. However, here's the problem, okay? The problem is whether this can continue at the same pace and cost to the states that it was during that collection, and whether or not the modernization of remote tax sales and the unification of regulations or uniformity to the marketplace facilitators law will continue to enable that high tax revenue collection, or will be a barrier now that the different sectors are reopening, right? So as e-commerce expands, you see there, economic nexus threshold that has been modified to focus on dollar amounts now, and no longer transition, continues to be a trend with the states, right, Michael? And particularly because they want to attract as much tax revenue as they can from e-commerce and marketplace sales.
Right. And I think one thing, George, we should point out that there was a lot of really good work done to your first bullet over the last several years for the Multi-State Tax Commission, which is a kind of a quasi-governmental entity, and the National Conference of State Legislators that actually writes model acts, so laws. They actually wrote the marketplace laws, and states were free to adopt those as they wanted to in part or in whole. But the point we're trying to make there is that once the Wayfair decision was out, there was a lot of really good work done by governments, by professional service providers, by a number of groups that actually came and got some really good model legislation drafted so that states could adopt these things so that they could start collecting or remitting in terms of the marketplaces. And I know, George, there were a number of issues that were addressed in terms of collection, remittance, defense. There were some things like product liability that weren't addressed, but overall a good result and some very good guidance that came out so that retailers could actually comply with the Wayfair decision.
That's exactly correct. That's extremely significant, and I'll tell you why. Because while right here in the first bullet you see the National Conference of State Legislation that coalesce very strongly around the advantages offered by Wayfair, nevertheless, cost that you mentioned, the Council on State Taxation, as well as the MTC, also has participation from the industry and companies themselves. So jointly, they literally modified the market facilitators laws, as you see on the fourth bullet there, that are now in place in many states. And although still work needs to be done both by the courts and by these intergovernmental organizations, we're becoming better at it. We're becoming better to requiring the platforms in collecting taxes and other related fees, but more importantly, to continue helping the states to maintain some sort of uniformity in this type of tax revenue collections, and particularly in the sales tax base that is being monitored so closely nowadays. So as I was saying, here you have, again, the NCSL and the Pew Trust, which is an organization that measures policy and the strong fiscal conditions, telling us that because of all that collection during the pre, during, and post-pandemic years remain strong, we are beginning to see some drawbacks. And one of those drawbacks is that, and Michael, you can speak to this very well because you just wrote an article about this, government policies and the way that they are reforming and cutting taxes, while at the same time we still remain in probably a recessionary outlook that may or may not occur, and high inflation created distortions. And these distortions are both fiscal and economic, okay? So Michael, you can speak to this.
Yeah, I think, George, we did some work together on this. What we've seen is that a number of states, almost 20, some over the last couple of years, have been cutting individual rates. They've been trying to give some relief along that lines. But what George and I have seen is that at the same time, the actual sales tax base is actually narrowing. There was a really good report done by the Tax Foundation in March of 2022, which detailed this. And the base upon which the sales tax is actually applied to today is about as small as it's ever been over the last, say, 50, 60 years of the sales tax. In order to get the same revenue amount out of the sales tax, you have to increase the rate. And the rate is at an all-time high this year, or for 2022, right around 10.2%. So while there's relief on one hand, there's also then more taxation on the other hand. And I think what George and I have seen is that there's no reason to think that those rates won't be going down anytime soon. And so the rates have to go up. The sales tax will become, the rates will even go higher. And I think what we think is there's a substantial part of the economy that's probably not being taxed, and that's probably in the area of professional services or personal services. So if you were to look out 2023 and beyond, that's probably an area where state legislators might want to increase the tax base rate.
Absolutely. That, and jointly, of course, with different digital service and products, and we're not even discussing advertising yet because it's very contentious. But that's exactly, Mike. Those are the kind of distortions that you see in Bullet 2. Because of states trying to lower taxes since they have abundant reserve funds for maybe one or two budget cycles, and they are also lowering taxes. At the same time, they're narrowing tax bases, but including other digital products. So again, as you see on the last bullet, as prices do rise and fall, there will be adjustments. And those adjustments will create, in turn, other distortions. So although people think that states are collecting a lot of taxes, indeed, they may or may not be. And particularly because during inflationary times and periods, costs will increase also not only for the taxpayer, but for government functions and operations, including tax collection, and aside from collection, of course, all public services. So this continuous adjustment to tax base and rates that leads to tax uncertainty, as Pete will tell you, will have an effect on retailers. And you'll see that in a few minutes. So this kind of compliance disorder and even non-compliance that will take many governments and tax professional by surprise is really no surprise at all. It is to be expected, as you will see. So, Peter, why don't you tell us about this?
Yep. Oh, thanks, George. Thanks, Mike. There's a lot of great information. So given all of that information that George and Mike just overviewed, as far as the economic and legislative reasons and factors of how we got here, I think it's important, at least from a retailer standpoint, to understand what does it mean? What does it mean to the consumer, and what does it mean to the retailer, and how do they have to react, and how do they have to sort of change the way that they work because of supply chain disruption and because of price increases. So we're going to take this in two steps here. We're going to look at supply chain disruption in and of itself first, and what that really means to the consumer is it obviously means shipping delays. I'm going to get my order a little later than I would normally, right? Or if I'm shipping something to someone else as a seller, it's going to take a little longer, whether that be because of the products are backlogged or back ordered, or because just the shipping channels are clogged. It also leads to limited stock situations, as we all know, as we all shop for things and see empty store shelves. So apologize there. So what we're going to take a look at is obviously what is it? How does this affect the customer, the consumer? How does it affect the retailer? And what is the tax implication of those changes and of those pivots? So the first one is obviously because of the shipping delays and limited stock, shoppers are shopping earlier. So what we see, especially during the holiday season, is that holiday shopping is starting to start earlier and earlier. We saw Amazon Prime Day happen way earlier in the fall than it normally does. You start to see sales of promotions and advertising for holiday shopping October, even September. So that's on the consumer side, right? How do retailers react? They're like I said, they're promoting earlier, they're advertising earlier. And what does that mean for in an early shopping scenario? Is that in the case of a merchandise return, this is just one example of a tax implication, is that the original purchase date can be further away from the merchandise return date. So if I buy a Christmas present in September and my gift recipient isn't returning it until January, that's just a larger window where that tax rate can change. And retailers have to refund the tax rate at time of purchase, not at the time of merchandise return. So there's some challenges there, especially around merchandise returns, along with some other logistical challenges there are with shopping earlier. We also started to see in the retail areas that customers are intentionally buying more that they need and intending to return what they don't need. We start to see this a lot the early months of the pandemic, when all of the shopping was online, and especially shopping for things like clothing. I'm going to buy multiple sizes, multiple styles of the same shirt. I'm going to try them on at home, and then I'm going to return what I don't want. All right, so you're going to buy more what you need, especially in a stock shortage situation. I'm just going to start to hoard, right? And what does that mean? Unprecedented returns. Again, all the challenges with merchandise returns. The buy online, return in store scenario, where I have to refund the tax that was charged at the customer's home address, not necessarily the address of the store location where he or she is returning it. We also, pretty common, long-standing challenge was even a store-to-store return. I purchased it in a store in Pennsylvania, and I return it in a store in New Jersey, right? So there's challenges there, keeping the rates right, refunding the customer what they originally paid, not necessarily the rate at the returning store, and then all of the monthly filings, credits, and things that you have to deal with when a transaction sort of transverses multiple jurisdictions like that. Another thing we saw was less brand loyalty. Obviously, if the brand that I always buy is out of stock and has been out of stock, is back ordered, I'm going to go to an alternative brand or a store brand, for example. And what that means is stores are going to have to, and meaning both online and brick and mortar, are going to have to offer more options, more brands. And that subsequently means that there's more SKUs that retailer has to manage, right? I have to manage the name brand as well as my store brand, and maybe I have to buy from 3 other distributors and get their brands on my shelves. And more SKUs means a bigger taxability matrix. And for those not familiar with that term, it's just a mapping of each product on my shelf or on my website and the sort of the taxability category or the tax rules that are tied to how do I tax that particular product. If it's food and beverage, if it's clothing, et cetera. And then each jurisdiction obviously has its own rules. So it starts to get complicated exponentially the larger that my product range gets. Okay. And customers, regardless of the supply chain disorder, I as a customer still expect that my order is shipped and received in a timely way. I still have that Amazon 2-day Prime delivery expectation. What we're starting to see is retailers get very creative with their brick and mortar locations, right? Using their stores distributed across the country as mini distribution centers. So they're not only for cash and carry type of transactions, but they're also fulfilling online orders. We've also started to see some stores just close altogether and become what they call dark stores, and they're not storefronts at all. They're really just distribution centers, and it allows retailers to fulfill orders closer to the customer. And what does that mean is that when you're calculating tax, you obviously have to account for the physical origin or the ship from, as well as the destination, i.e. the ship to. And what that means is the physical origin can be just about anywhere. So if you think of a large big box retailer with thousands of locations across the country, my online order can be fulfilled from any one of those thousands of store locations, and that needs to be incorporated into the tax calculation. And finally, you can't find products in the store, right? You go to the grocery store, empty shelves. We start to see that we saw this early on in the pandemic with toilet paper, hand sanitizer, things like that. And now we're starting to see it with other types of products. And stores and retailers are really trying to incorporate this idea of endless aisle. It's nothing new, but I think it really got a lot of focus during the pandemic in that customers walk into my store, they don't see what they want, and the retailer is able to order that pretty much like an e-commerce order right there in the store. And the tax implication of that is obviously you're going to have a mix of cash and carry items, as well as items that are going to be shipped to my home at a later date. Maybe a mix of items that are being shipped to different places. Maybe I go to the store and find that they're fully stocked in toilet paper, and I'm going to ship some to my neighbors and ship some to my parents and ship some to my house. So you're going to start to see a lot of complex transactions, a lot of line items within the same order that have different ship froms and ship tos. Okay, so that's just a smattering of some examples of challenges when it comes to the supply chain. We're going to move on now to price increases. And we're going to do the same thing. We're going to look at how customers are reacting to this, how retailers are in turn reacting to the customer, and then what are the tax implications of that. Obviously, the move to online, depending on which study you read, the pandemic accelerated the move to online by 10 years, maybe 20 years. As George showed in that graph, whatever the factor is, it accelerated online shopping exponentially, right? We wouldn't be where we are today if the world didn't shut down March of 2020. So what does that mean for the retailer? Obviously, it means expanded geographies. Now, as a local retailer, I'm not just selling to my local town, my local area. I could sell anywhere in the world. And what that means is I might be on the hook for collecting and remitting tax for those other jurisdictions. As George and Mike mentioned, the Wayfair ruling. And for those not familiar with it, basically says, look, you don't need physical presence to have to file in that particular jurisdiction. If I have enough online orders into a certain state, I have an obligation to register there, charge my customers tax, collect that tax, and remit that tax. So that is huge for a retailer, especially the smaller retailers that are not registered everywhere. They might only be registered in their local state, maybe their tri-state area, and now they're registering in all 50 states. So definitely a huge challenge for those smaller retailers. Obviously, customers are bargain shopping. They're looking for the best price. They're not necessarily loyal to a particular retailer so much anymore. As we talked about in the last slide, brand loyalty, but we're also talking retailer loyalty. I'm shopping around. And what does that mean? Retailers are obviously offering more promotions. It's super competitive out there now. We're trying to grab as many customers as we possibly can. And what that means is that there's different taxability depending on how that discount is structured, right? Is it a discount, meaning a retailer discount? It is essentially a price adjustment. It's just, I'm just lowering my price, versus a rebate, which is sort of a vendor-funded, manufacturer-funded discount, in that it's essentially treated as tender. So again, it's a matter of taxing on gross or taxing on net of discount. Shopping marketplaces. This goes along with the bargain shopping, right? So I can't find it on the retailer's own website, so I'm going to go to a marketplace, and it's sort of this sort of one-stop shop. I can see multiple retailers. I can compare prices across across multiple retailers for that particular product. And retailers have the option. Right? Some retailers have chosen, hey, I'm going to host my own marketplace, or I'm going to in turn sell on another marketplace. Hosting a marketplace has gained a lot of popularity, not just for the same product, but for this, again, going to the competitiveness of retail, is providing this overall experience to further differentiate my brand from my competitors. So for example, I might be a sporting goods retailer, but I might also sell excursions or expeditions to sort of go along with the products that I sell. I buy some hiking equipment, and I can buy a hiking excursion along with it. I buy some golf equipment, and maybe there's a golf outing I can also package in there with it. So the marketplaces have gotten really creative. We also lump into this marketplace, which we always think of the traditional marketplace of like eBay, Amazon, Walmart, Etsy, etc. We also lump in the food delivery services, which have gained huge popularity during the pandemic, right? The DoorDashes, Grubhubs, Uber Eats of the world, is that you're transacting with this marketplace, the food delivery service, and then the seller is obviously the McDonald's or the Chick-fil-A on the other end. So tax implication there is huge. George mentioned it earlier, marketplace facilitator laws, who's responsible for collecting what, who's responsible for filing what, is it the seller, is it the marketplace? And there's a whole challenge. That's a challenge in itself, is the marketplace facilitator laws. Resale. So we start to see things like Poshmark and eBay. I might not be able to find, or maybe because of price increase, I might not want to afford brand new, whatever it is. I'm going to go to Poshmark and eBay and buy someone's used item. And that has gained a lot of popularity. Obviously, the taxability of used goods can be different than the taxability of new goods. And that's some challenge to manage, especially if you're someone like eBay or in Poshmark. They sell both new things and previously used things. So it's that it almost takes your product range and doubles it, right? Because I need a SKU for the new item and then a SKU for the exact same item but used. Renting. So this isn't just things like cars and maybe even cell phones anymore. You can rent just about anything. Clothing retailers have gotten creative with rent the runway type of concepts, where I rent a formal, tuxedo for just a single event. Tuxedo is nothing new, but we started to see that with even more types of clothing than just formal wear. And then because of that, right, it's not a sales tax anymore per se. Obviously, it could bleed into leasing rental tax rates, which could be different depending on the state. So there's that to manage. And again, it's not just the SKU or the item itself. How is it being used? Is it being sold? Is it being rented? Trade in, trade up. Again, not just cell phones anymore, where you can, new every 2, you trade in your old cell phone, you get a new cell phone. We're starting to see this again in the clothing area, where people can actually trade in their blue jeans, right? Higher end blue jean companies are buying back used jeans, and you can upgrade to the next model, so to speak. And so this poses some tax implications. And then are they buying your used jeans and then selling you new ones, or is it a credit on the sale of a new pair of jeans? There's a lot of permutations of that, and obviously some tax considerations that need to be made when you're having a scenario like that. And then lastly, installment plans, micropayments. This is huge nowadays. You start to see firms like services like Affirm and Klarna being offered on even the biggest box of retailers. These are installment plan programs. They're not necessarily open lines of credit. And they sometimes there's a fee, sometimes there's not, sometimes there's interest charge, sometimes there's not. So there's different permutations of that as well. And you start to see when it comes to tax is when do you charge the tax? Is it upfront? Is it during the course of those installment payments? Is it streamed across all of them? So there's some things to think about there when you're offering a installment plan like Affirm or Klarna as examples. So that's sort of a whirlwind tour, a very quick and high-level overview of some of the things that we're seeing in the retail space in reaction to price increases and supply chain disruption. There's a lot more out there, and there's I didn't do justice to the tax implications of that, because this is why we do what we do, is we help our customers solve for these. So it's just an example of how things at a very high level, like at the economy level, can trickle down to, on the ground. This is how the average consumer is being affected, and then in turn how retailers are reacting to that. George, Mike, I'll turn it back to you.
Thank you very much, Peter. I was taking some notes while you were going through the impact to retailers. And as we look at the key takeaways, three things came to me that you also have present here on the key takeaways. Number one, all I see from the legislative, economic, fiscal, tax, and of course, retail sales side is complexity. How much complexity has heightened and how it has been produced by the three seismic shocks that you see on the first bullet. We often forget that these shocks have come all within a decade, within the same decade. And that's in economic history, and for that matter, international global history. This is hard. This has created great complexity, has created great economic difficulties. And notice that in the opening, I did not speak of supply chain disruptions. You did. I talked only about supply knots, which is produced, of course, by supply chain disruptions. So I wanted to mention that is because these three shocks, one, the financial crisis, right as we were about to go into a trough and incline in the business cycle on financial crisis, we get into the pandemic. And then as the pandemic suddenly starts going down and we look like there is some success in growth and retrenchment on the horizon, what do we see? A war, right? We see the disruption created in different commodities around the world, impacting prices, of course, and supply chains again. So not only are we dealing with disruption, we are dealing with destruction. And by destruction, I'm not speaking about the war. I'm speaking about some of these supply chains have to be reconstructed, re-architected, restructured. They will never be here again. And this complexity will add more to problems in retail sales, challenges in taxation, heightened inflation, the possibility of, even if a moderate soft landing type of recession, whether we have one or not. So supply chains will have to be restructured, right? Rebuilt into networks. I was listening to you saying how you can go to another store and now you have created one or two new tax obligations. So that is very important. On the third bullet, you see that reflected. You see that as this destruction and restructure becomes a possibility, that inflation becomes a higher burden tax for taxpayers and governments alike. And that includes, of course, companies, right? So we're going to have to employ better automation for tax planning tactics, better techniques, global and regional tax modeling that can tell us how supply chain networks operate in a new post-COVID and post-maybe war environment. So this is very important when we look at the expansions and contractions and adjustments to sales tax base and price volatility. Michael?
Yeah, I think so, George. Just one quick thought as we kind of have some other key takeaways is if you listen to the complexity of what Peter was talking about, where the customer experience now is much more deeper and richer and wider than traditionally just going in and buying something in a store, not just adding SKUs, but adding geographies. And you think about the policy decisions around where government legislators are actually looking to get funding. As George mentioned earlier, as it relates to federal aid, there's not going to be any more federal aid in the future. That was extraordinary, it was exceptional, and all of that federal payments are going to actually end in 2024. So as you look at 2024 and beyond, there's going to be a lot more legislative attention based upon not only these e-commerce experiences, which is now completely mainstream into our buying process, but also the revenues that actually sit out there and the expansion of these bases. So more complex, more customer choices. Obviously, you have to stay on top of all of these things, particularly if you are collecting these sales taxes.
I definitely agree. And when you look at the landscape overall, Michael and Peter, you look at the true impacts, right? And after all, this is what we're discussing here. Often people don't see the correlation between supply-demand markets, prices, tax operation, taxability, especially in an era of digital taxation that we are experiencing, and how it's impacting every part of and every area and every sector within retail and remote sales as a contributing factor to the driver in the global economy. So I'm asking our listeners and viewers to take this into consideration, as he says there, and as Mike was saying on bullet 4. Take a look how better tax planning, modeling strategies to expansion of markets and products within the tax base, how tax automation can ready companies to literally adjust quicker, and networking within price volatility scales that are very important. So how do you do that today, right? I mean, no longer can you do that in just with a couple of meetings and an Excel sheet and I mean, the world is more complex. So you have fiscal complexity, tax complexity, remote sales complexity, and market complexity that adds to supply chain disruptions and possibly destruction. So what is good about all this is what's on the horizon, right? I mean, in the horizon, we're going to see better supply chain resiliency, better supply chains prime, as I say there on bullet 2, for incoming global crisis as they happen, and there will be more. So thank you very much. Any last word?
No.
Michael,
I think
Peter?
so at this point. No. Thank you, George.
Well, thank you very much. It's good for you to have joined us today, and it's been our pleasure presenting this session to you. Thank you very much.
Thank you. That was an excellent presentation. So we appreciate the insight, gentlemen. We have had a number of questions submitted. So thank you to all of our audience members. And of course, if you have one, you can submit that using the Q&A widget on your screen. So our first one here asks, what are the most significant pivots that you've seen retailers take in the past year?
Sure, I can take that one. I outlined a lot of the pivots and a lot of the new ways of selling that retailers are coming up with to react to new consumer demands. And those are really, very specific things like, and when we talk about curbside pickup and all of these omni-channel types of things. But the biggest pivot I've noticed is that there's a mindset shift in that retailers now are anticipating the next disruptor instead of just thinking about it or, what if. So 3 years ago or more, retailers would theorize, well, what would happen if all of our stores closed and we had to go completely digital, completely online? And then boom, March 13th, 2020 happened and all the stores did shut down. What did they have to do? They had to ramp up their e-commerce capabilities. They had to account for all the inventory that are stuck now in physical store locations, and how do I get those out, and how do I get those in the hands of the customers, and how do I continue selling? So the pivot, I think, is over the past, and maybe it's not just the past year, but over the past 3 years, is the shift of anticipating the next disruptor. And how do I do that? Well, I open up more sales channels and break the silos down between those channels. So we think about brick and mortar, and we think about online, and online can mean conventional website as well as mobile shopping, mobile commerce. But there's channels that are starting to gain popularity, and channels that we haven't even thought of yet. Who thought you could buy things on social media or inside of a video game? And now we've got the metaverse, where you've got sort of virtual reality. I could go in and buy certain things. So IoT, smart fridges and things like that, where I can actually buy my groceries right from my fridge. Who knows where it's going to go next? And I think retailers are really become more proactive than reactive to customer demand and trying to anticipate that. So that to me is the biggest pivot. It's a mindset shift.
Excellent. Thank you. Our next question asks, what are or will be the most significant changes in legislation moving forward?
Yeah, George, I can take a quick stab at that. I think what you're going to see is some things that we alluded to earlier in the webcast is that the base of sales tax actually has to be expanded. And the reason it does is because, as we mentioned earlier, the sales tax is much more resilient in terms of economic stress than the income and the property tax. And so I think what legislators are thinking more about is actually taxing consumption rather than taxing income or capital. It's the thing about sales tax is it provides a nice steady cash flow to the governments every month. It's generally easier to administer, and it's generally easier to audit. I think where there's been some struggles with Department of Revenues and locals is that they've had challenges actually staffing and actually auditing all of this. But I think they'll get the enforcement piece of it worked out. But definitely the rotation is more towards either sales tax or gross receipts tax.
Michael, I certainly agree with that, because we have a bit of a conundrum that is appearing. On the one hand, we are reducing taxes, narrowing tax bases, prices keeps going up, and there are calls for new taxes, such as digital taxes. Not only digital goods and services, but also many states do not and have not yet started to really tax digital services. You will see a lot more of that in the near future. And more important is the question of this European influence digital tax, whether or not we'll see it. And I'm almost sure that this year we will see some sort of compromise, and hope not, but some sort of compromise in some states of what constitute digital taxes, given the constitutional difficulties that comprises that question. But also more importantly, you keep hearing these calls towards national sales taxes or sales tax regimes. And whether or not that is certain, can it be done because it's been called for that before? That will be something to see as well as to how states will react to those calls from the federal government. And for the same token, the federal government now is also beginning to signal that they may like to enter the state domains of sales taxation, not only because of federal taxation, but for example, in marketplaces and in fintech type of payments, you beginning to see the federal government in remote sales saying, we want to see with a new 1099K anything over $600 in expense, and that needs to be reported. So we're beginning to see the federal government look into marketplace uniformity more closer. We all remember that GAO report from November 2022 that talks about how can the federal government assist in that marketplace and digital economy regulation a bit more. So we have surprises arising this year, some that are foreseeable and some that I bet you and the audience that are not foreseeable. So certainly there are a lot of changes ahead in 2023-24.
Excellent. Thank you so much. That is all the time that we have for today. Thank you to our presenters from Vertex and all the viewers that were able to set time aside to join us today. If you asked a question that we did not get to, someone will respond via email. We look forward to seeing you soon.